Hello everyone, my name's Norman Hall. I'm the Director of Marketing for Star Business Solutions. Welcome to the 2018 webinar series. Today's topic is Greentree Advanced Job Cost, and this topic was chosen after the last webinar from the input from various people who joined us then. Today with me I've got Josh Diffie. He is our pre-sales engineer and demo guru, and he's an expert on job costing. He'll be doing most of the heavy lifting today with the presentation. Our agenda for today will go through only a small aspect of job cost, because as you're probably aware, job costing is a very broad and diverse topic within Greentree, and it can take actually lots of time for us to go through every little aspect of Greentree. So we've chosen a couple, being work centre plans, estimate variations, and revenue recognition to go over today. However, at the end of the webinar, we will have plenty of time for questions, and if you have any questions that go outside of those three areas, then Josh will be happy to answer them for you if time permits, and if he hasn't got the answer for you on the spot, he will definitely be able to get back to you. So as I said, Josh will be taking over now and giving you a demonstration on advanced job costing. Over to you.
Okay, so let's jump on into Greentree. So the three areas, as discussed, we'll be able to cover through today with a couple of examples. The first two being work centre plans and estimate variations. I'm going to go through in a single example, effectively, to cover as much content today as possible. So let's bring up the job maintenance screen. And a bit of here's one I prepared earlier. So within Greentree job cost, as discussed, I'm not going to go through every single area of a job or project within Greentree, just the key points for today's demonstration or webinar. The first area being work centre plans. So for those who aren't familiar with work centres, because not all of our sites using job cost use these to a large degree. Some use them quite heavily, but some of them will effectively just have a single work centre called default. Work centres are another form of having the ability to summarise costs or allocate costs to specific areas. So in my example, being a new computer system on my job, I've created a work centre plan called computer system installation. Now, the idea of a work centre plan is to limit the work centres that are available for any one job. Within those work centres, you can categorise them into a bit of a hierarchy and order those. And also within each work centre, you can limit which activity codes, employees, and so on can be used. So let's dive on in and have a look at the work centre plan that I've got selected against this job. So the idea behind the work centre plan is I can see my structure on the left-hand side. So for those that are familiar with Greentree trees, it's similar in concept. Okay, you set it all up within here. You don't have to go off to the tree maintenance to do this, but just as a bit of an idea, this is, as I said, similar in concept. So you'll see on the left-hand side, I've got a work centre called planning. Now, if I make this screen a little bigger, I can see that the posting level is not ticked. So the idea is you can have a number of work centres that you can use to summarise other work centres, much like those that are familiar with trees, being able to have branches and sub-branches. So under planning, I've got two sub-work centres, one called specifications and one called assembly. Under the assembly work centre, I've limited the activity group to being the labour assembly activity group. So what this means is that when you start doing transactions, historically, what a lot of sites do without work centre plans is they'll select the job, they'll then select the activity, and usually the work center will default, or they'll select the work center after that. This kind of flips it on its head a little bit. You first select the job like you normally would. You would then select the work center from a list of restricted work centers based on that work center plan, and then select the activity based on a restricted list of activities for that work center. If you wish, you can also limit which employees have access to enter transactions on those work centers as well. In this example, I've left it all open. You've got the ability of defining a default percent complete. So as we get through a little bit today of these work center plans, you'll see that you can not only track costs and estimates against each of these work centers, which some of you may already be doing, but you can also start calculating percent completes for each of these work centers. And when we get to invoicing a few steps further along, we can invoice completed work centers only if we decide to. Now, this default percent complete is going to relate not only to the work center plans that we go through initially now, but also when we get to revenue recognition as well. So the idea is it takes one of these calculations. So in the examples you can see here, I've got budget versus actual from a cost perspective, budget versus actual from an hours perspective, and budget versus actual from a sell or retail rate perspective. So if I was to think of it from the budget versus actual cost, simply put, if I said that this work center had a budget of $10,000 cost, and so far we've received $5,000 cost, then that top selection would of course mean it was 50%. If you are more focused from a labor perspective, but there are some materials that might be skewing those numbers, you might decide to use hours instead. Alternatively, you can also use elapsed time. So simply put, a work center can have a scheduled start and scheduled end time on a work center plan, and you can use that elapsed time to determine what percentage you are complete so far. So jumping on a little bit, so I've already got some costs against this project and an estimate against this project, and I'm going to jump to this Work Centers tab, which becomes available when you have a work center plan selected. And I'm just going to hit Apply. So this is now going to show me, if I make the screen a little bigger, those work centers in that tree-like structure that I just showed you in the work center plan maintenance screen. If you wish, you can also put scheduled start and scheduled completion dates on each one of these work centers for scheduling purposes, as well as percent complete calculations if you're using elapsed time. The examples I've used today are budget versus actual from a cost perspective, so I didn't require those scheduled start and completion times. You'll notice a percent complete, so we can see that my planning stage has already finished. And I'm already up to my on-site events, where I've started my installation, but I haven't finished it. I'm only about 13% or 14% of the way through that section. And we haven't got to the testing, training, or the subsequent areas as yet. You can expand on any one of these. So I can see my specification here. I'm 100% complete. I was only about 94 or 95% there of the cost, so I've come under budget. So good on us for the specification area, but we've blown the budget by quite a lot on the assembly area. If I press the little plus there, I can see what that relates to. So the labor was pretty good, but my stock, I went well over. So potentially maybe your supplier costs went up, or whatever else might come into play there, maybe freight charges and so on. You've got the ability of updating these percent completes on the fly if you wish. Alternatively, there is more of a review process that you can go through, which can calculate all these numbers for you as an estimate, and then you can decide how accurate or what numbers you wish to decide to use. Now, this is a clever table. There's quite a few columns on this screen. You can, of course, turn them on or off, user by user, if that's appropriate. But in this example, I'm seeing all the information that could be relevant to those percent complete methods. So budgets versus actuals from a cost perspective, what outstanding purchase orders, hours, and retail might be in play. If you don't need all those, then of course, as usual, you can turn them off. So to give you an idea of how that calculation can come into play, we simply come into our what we call Work Center Review. Now I'm just going to select the single job just to make things nice and simple to begin with. And let's just maximize that and hit search now. So this screen, once again, has quite a few columns in it. And yes, you can turn them off if you're not using them all. But they look similar to the screen I was just on that Work Center tab. We can see here, my planning stage has been marked as complete and it's showing in a blue color. So I don't have to worry about that section if I don't need to update that at any stage. I can come in and simply hit select all and calculate, or I can come in and maybe select certain areas if that's more appropriate as well. So hit calculate there. That will then give you a calculated percentage, and then you have the ability to override that at this stage and hit save. So if you do have a situation where project managers are going through and confirming what percentage they are complete to date, this is where you can come to this screen. And it's a similar screen in nature to what we'll be getting to shortly with revenue recognition. So if I come in here, I can have a look, and once again, I'll scroll across a little bit. So I can start seeing, once again, what I've completed to date. When I get to actually invoicing this project, one of the things you can now do with Work Center plans is when coming into your bulk create invoices, there's an additional tick box to say completed work centers only. So let's go ahead and select that project and tick that box and hit search now. So this project is a time and materials project. I've got a whole bunch of costs that are currently sitting against installation and a few other areas, but those aren't completed yet. So when I come in and hit create pro forma, and let's put in today's date, that's gone in, it's created a pro forma invoice for me. I'll make that screen a little bigger and hit the Get Sales tab. I can start seeing it's already gone through and ticked a whole bunch of lines for me, but you'll notice the two installation lines down the bottom, here and here, have not been selected for invoicing because that section hasn't been completed. So that is Work Center plans in a little bit of a nutshell there. What I thought I'd now do is jump on into estimate variations using the exact same job that we're looking at here to give you an idea of how that might work or come into play in certain projects. So estimates within Greentree without estimate variations effectively have a current estimate concept. You can have as many estimates on a project as you'd like, and you simply tick which one is current to decide just that, which one is the current estimate to be used for various reporting. The idea behind estimate variations is instead of having a single current estimate, all estimates on the job are summed together to make a master estimate. And so if there are any variations along the way, you don't simply go and update the previous or current estimate. You simply create a new estimate for just those additions or subtractions, depending on what the case may be. And that will then update the master for me. So here's a bit of an example. My original estimate for this project, I came in and I had, for example, 20 computers required and 20 monitors required for this project. At some stage along the way, the clients told us, you know what, we need an additional 5 computers. So I've then created a variation 1, which has those additional 5. And I can see I've noted that in the narration as well, both computers and monitors. What that's gone and done, if I was to have a look at my master estimate, it's added those together. So they are separate line items. So from a clarity perspective, I can still see that. And if for some reason, maybe they come back to us and say, you know what, we don't need as many, or we need more training, or whatever else it might be, I can simply come in create a new variation. And as I said, maybe the decision was they need a bit more training. So I can come in here, I can select training, I can select my appropriate work center, and let's assume that for argument's sake, we need a service technician to do that, and it's an extra 10 hours worth of training. At this case, I'd probably put a nice narration of what that's for, but we'll leave that blank for the moment. If I hit save and go back to my master, we can see that additional 10 hours has been added for training. Now, the master estimate is read-only. You can't actually edit the master estimate itself. The idea being that all edits are done on the other estimates, and they are all summarized onto one estimate here. So in making those changes, it's quite a handy process if you do have to go through estimate variations. Some of our sites for estimate variations will create a subjob to do that, and you can still, of course, go down that path if that's more appropriate. But this is just another option available to you within advanced job cost. Another benefit for the estimate variations for those that are using requisitions within Greentree is that you can always do the requisitions against the master estimate itself. So if you were to make changes to an estimate on a job, it's very common for someone to make a copy of that estimate and make the changes on that. In this process, you obviously don't have to go through that process. You can just make your variation estimate by itself, but then you can continue onto the master estimate and hit my create requisitions button from there. Any lines that have already had requisitions created will be there, and any that haven't, I can now select. Which means that your requisitions will always have a link back to their original estimate lines. So that is estimate variations. You've got the ability to import those like any other estimate. So if there is a process involved in that, you can go ahead and do that also. So let's jump on into revenue recognition. Now, revenue recognition has a lot of similar concepts to what we just went through with work center plans. Generally speaking, revenue recognition is for fixed price type jobs or potentially jobs that are long in duration, but not regular in invoicing. So in that example, it could be a situation where you have a project that goes for 6 months and you're only allowed to invoice, say, 50% halfway through the job and 50% on completion. Or it could be milestone billing in one way, shape or form when certain stages and such are being completed. So what happens in those situations is, of course, that when you reach those given months, the profitability of a job is very good. But on those months on the lead up in, say, a 12-month project where you can't invoice for the first 3 months, the profitability of that project looks quite low. So if I go to my additional tab, the few extra options around advanced job costs that relate in this scenario. One is that used estimate variations, which we've also already gone through a little bit so far. But then obviously the revenue recognition area down here. So there's 2 calculations that you need to keep in play or keep in mind. The first one is the % complete calculation. Now, as I said, we've kind of just gone through this one with the work center plans. However, at this stage, it's not at a work center level, it is at a job level. So I've got it here based on elapsed time, just to keep it nice and simple to begin with. I've said the project starts the 1st of August 2018, and my expected completion date is end of February 2019. So as I progress through this project, it will calculate that or estimate the % complete based on the current period and how far along we are in the project. We then have the ability of saying, well, once we've worked out what the % complete is, what revenue calculation do we want to use for that percentage? So for today's demonstration, I've kept it relatively simple, and I've just used the job value, which is $50,000 on the main tab. One single number, nice and simple. However, you do have the ability of using the estimated cell. So in that example, that would look at all your estimate lines and look at the cell value of that, and then calculate the percent based off that. The revenue to date, can be used based on effectively what's been earned so far, and total invoice, so what's been invoiced to date. So in that scenario, that might be total invoiced is maybe where you invoiced everything up front, and you effectively want to recognize that as you progress through. Two additional tabs become available when you use revenue recognition on a job. The revenue tab, which is where we'll start, and I can hit apply. Now this job, I've already had some costs against it, and I've already done some calculations before today's webinar, just to get a bit of a feel of what sort of transactions and what sort of efforts required to get us here. So here I can see that we're up to October, and August and September, which were the first 2 months of that project, have been estimated, calculated, and posted. And I can see that right here. Now, once again, I keep saying this, but just to clarify, these columns on these clever tables, there's a lot of information that you may want to look at when doing this process, but realistically, you won't need it all. And different businesses will use different areas for different reasons. So you can turn the ones off that you're not using. But if I have a look here, I've got my estimated percent complete, my actual percent complete. So in August, the system said we were 14.6% of the way through the project. And for whatever reason, the project manager or whoever was in charge decided, you know what, we're only 10% of the way through the job, and that's all we want to recognize. It'll then tell you what the estimated revenue would have been versus what you actually recognized. And then we have a number of additional columns that can be used to help you decide those numbers. So I've got my estimated and actual hours, estimated and actual labor cost, estimated and actual non-labor cost, and so on and so on. You're getting to choose, of course, what information you're interested in. So if I go ahead and go through the similar process that we just went through from a work center review, and let's bring up that individual project. Now, of course, I'm doing this on an individual project basis because it's a lot easier to demonstrate and show you the specific steps. But of course, you can do this on a much larger scale. So each project manager can come in and do this for all their projects, and then potentially someone in maybe the finance department or some other area of the business can decide, do the final step as we progress through. So in this fixed price project, the system thinks we're 43.4% of the way through this project based on that elapsed time calculation. Now, if you're simply using these percent completes as they're calculated, then you can just do a quick select all, copy estimate to actual, and then we're good to go. Now, that's a decision that you can make on a case-by-case basis really here, because you might decide, well, we're not really 43% of the way through. We're actually much further of the way through. We got through quite a lot of the work this month, so we're going to jump that up to 50%. So we're going to start recognizing some of that revenue a little earlier than what the elapsed time would suggest. I can then hit confirm. And if I'm someone who has access to do the actual posting of these transactions, I can go to this next step. So the idea being there's a three-step process, and you can decide who's involved in each one of these steps. There's an original calculation step, which is effectively just a quick button, you press it and away it goes. And quite often you might have it that someone in the finance department saying, yep, we're ready to start this process, select all the jobs that use revenue recognition, and let's hit calculate. And then each of the project managers might then go through that previous step we just went through, which is more of a review, to go through each of their projects. And once they've confirmed, it may go back to a finance role to actually do the actual end step, which is posting these transactions. So I'm just going to post that through, but it does give you the option before posting to, of course, look through and make sure you're happy that those percentages that are different from the actuals effectively are reviewed. If I go now have a look at that project, have a look at that revenue tab that was just in before, I can now see that that third line has now been updated, and I can see what the actual revenue to date has been, or what has been recognised. So that is revenue recognition, its estimate variations, and work centre plans. So as Norman had suggested a little earlier, we did want to leave a reasonable amount of time in this webinar to cover questions, because job cost is such a broad area that we wanted to cover a few quite specific topics, but then give you guys the option to then ask questions. And what we'll try and do is in this session, answer them right here and now, but where appropriate, we might decide that either a more detailed conversation may be required, and make the suggestion that you talk with your Greentree consultant around that. So we'll open it up to everyone. So let's just come in and have a look at what questions we have so far. Can you take us through the use of the forecast tab? I sure can. So the idea of the forecast tab is it's going to take you through what the expected revenue for that project was, using that calculation we went through earlier. For my job here, it was based on the job value, but for other jobs, it might be based on the estimated sell rate or invoice to date. I've then got the option of seeing what the revenue taken to date might be. I've got what revenue is yet to be taken, what's unallocated, what's in the current month. So you'll notice that 12,500 of what we just recognised before has shown up, and then what we've got remaining. Now you can either spread that evenly or come in here and edit those numbers and be more specific. Now in the elapsed time scenario, an even spread makes sense. In a more budget versus actual cost perspective, you might know that you've got some big costs coming in a certain month, so you might want to increase that estimated revenue or forecasted revenue at that point in time.
Any more questions?
We can see 20 attendees on the line. I can only assume that there are some job cost questions that you guys might have. So if you do want to keep them coming, we will do our best to, as I said, answer them for you.
No?
Give them a little bit of time to type them. Job cost questions can, of course, be a little bit more complicated to ask, so potentially typing them down might be a bit difficult.
We have something from Belinda.
Belinda, I started late. Will there be a copy of this sent out?
Yes, we've got the system set up to automatically email you a link to the recording of the webinar. It should come out about this time tomorrow. If you haven't seen any advice by Friday, please send me an email and I'll arrange for a separate link. But hopefully the auto mail out will happen
as planned.
Yeah, as planned. Yes. I won't be here Monday or Tuesday though. So if I don't get it on Friday, you'll have to wait till Wednesday next week after the Melbourne Cup. Any more questions?
Looks like we didn't need to allocate as much time to questions as we did. We could have maybe covered some more topics for you guys.
Yeah. Okay, well, unless there's any more questions that people have, we'll probably wrap it up. Firstly, thank you to everyone for logging into today's webinar. As I just mentioned, an auto link should be sent out to everyone sometime tomorrow morning with a copy of this recording. Please feel free to share that with your work colleagues. If you have any specific questions that we haven't covered or that you think of between now and tomorrow, please email Josh or your STAR consultant, and they or he will be able to get back to you. Bear in mind that complex questions might actually take some time to get back to you on. As part of this webinar, we've also set up a survey, so that will be automatically sent to everyone, and the survey's just got a couple of questions about topics for future webinars, how often you want them, those sorts of things. So we would appreciate your feedback on the survey, because it will help me determine which topics we will be addressing going forward, and how often we're going to be doing them. We do have a list already, but your input is important to us. I'd also like to thank Josh for giving up his time. And most of you might not be aware, but we also have our senior consultant, Ellie Dean, in the room with us, just in case we had any curly questions. So I'd like to thank her for giving up her time as well. So thanks a lot, and see you on the next webinar.
Ciao all.